Hello, judges. My name is Jared. I want to start by introducing my team. This is Lonnie, Charlie, and Tim. We're excited to share with you why we feel Sempra Energy is undervalued at its current price of $70. And through our evaluation, we have a target price of $93.76 or 34% upside.
Our buy recommendations is driven by 5 strong thesis points. First, generational super cycle. Second, strategic geographic positioning. Third, LNG market leadership. Fourth, expansions of AI and data center. And last, robust financials. We believe that Sempra is the leading energy company in North America, serving 40 million of consumers. Its revenue comes from 3 main segments. 57% comes from utility, 26% comes from infrastructure, and 17% comes from renewables. In terms of region, 47% comes from California, 26% from Sempra, Texas, and 27% comes from Sempra, Mexico, or Sempra infrastructure. With Sempra's strong foundations in the U.S. energy market, Sempra is positioned for a long-term success. There are 3 main points why Sempra is very unique against its competitors. Its diversified portfolio across U.S. and also Mexico ensures revenue stability and also minimizes or reduces market risk against its competitors with narrow range like Exelon and Duke that only have narrow reach. With Sempra's focus on strategic focus, modernization boosts operational efficiency and strengthen financial performance. Also, Sempra tap into exporting into the global demand. These points make Sempra very unique against its competitors.
So the foundation of our investment thesis is that we're at the beginning of a generational super cycle. So Jeffrey Martin said, today we believe utilities are in a super cycle with future projected growth trending higher than historical sector averages. So historically, I'd like to break down energy consumption in America into 20-year generations. So all the way at the left, from 1950 to 1970, we saw an 8% average annual growth. Then that slowed to about 4% from 1980 to 2000. 2020, it was 0.5%, so no growth at all. However, projections say that this is not the case for the next 20 years, where, as you can see, all bull and bear cases, and using the median of them, we project a 5% average annual growth by 2050 nationwide. But it gets even better, where in Texas, Sempra's key area, it's higher at 76%, or 13% year on year, and this is by 2030. And this ties into our second thesis, and that is their geographic positioning. So Sempra operates in one of the most consequential parts of America, the Permian Basin, where today 50% of oil and 20% of LNG is produced. And Sempra is the pipelines and it's the distribution connecting the Permian Basin to all the major interstate networks and the export harbors in the Gulf states. As we can see, this is actually a relatively new phenomenon. And it's key to know that with this new president in office, whose directive is to drill, baby, drill, we project this to accelerate further into the future. More expanded is Sempra operates in the number 1 and number 2 largest economies in the United States, the number 1 and number 2 biggest energy consumers, and they operate in the number 1 trade partner. So with this strong geographic positioning, they've instituted a $48 billion, and we heard 2 days ago, it went up to $56 billion, showing their confidence in this to expand and modernize this infrastructure. Because the truth is, no matter what the market demands, electric demand will grow, but only as fast as the energy infrastructure grows to allow it.
Our third thesis is that Sempra is a leader in the global LNG market. LNG provides energy security and has lower emissions compared to coal. While Sempra is currently focused in the U.S. market, the international LNG market will be a key driver for future growth. As you can see here from the chart, the U.S. market share for LNG has been increasing over the years, and Sempra is positioned to capture this growth with 1 operational plant and 2 under construction. That's Port Arthur Phase 1 and Energía Costa Azul in Mexico. Not to mention, distribution and transmission, which are crucial for LNG transportation, are Sempra's core businesses, with over 300,000 miles of infrastructure. Our fourth thesis is that AI and data centers are transforming energy demand. By 2030, it is expected that AI-driven and data center-driven electricity use will grow from 2% to 11% of total U.S. consumption. Sempra is also positioned to capture this growth, with Oncor in Texas serving the tech corridor and AI-driven industries there, and SDG&E in California supporting the state's 100% clean energy goal by 2045. Jeffrey Martin, Sempra's CEO, stated, data centers, hyperscalers, and artificial intelligence are intensive when it comes to energy consumption, and we are going to significantly raise our capital campaign program to address this demand.
Our number 5 thesis is their strong financial growth. We see Sempra has a steady revenue growth over the past few years. And with the management has a target earnings per share year over year, they also met this target, which we believe Sempra could continue with this format. And then we take a look closely in their margins, and we realize their pre-tax margins is actually lower than their net income margin. And this is due because of the tax credit benefits that these states are given to Sempra. Not a lot of energy or utility companies to be able to do this. That's what makes Sempra a little bit more unique. And then we put into our valuation model where we forecast a 3 and 5% range of revenue growth, and then a 10% growth increase of in the next 5 years. We look at historical trends, logical assumptions, and also the market outlook that we think that software and AI companies going to enter Sempra's region. We believe that Sempra can achieve its higher market share, earnings per share. And then we each put into our models, well, we put mainly price to earnings ratio, which is weighting about 60%, and then a PB multiple of 30% and DCF of 10%. We mainly weighting using a PE multiple because it's focus of net income and earnings per share target for the management, which makes it more us to be more confident in this model. And the PB multiple to recognize its net asset value, and also the DCF, which we use only 10% because of its high volatility on the free cash flow, so we put it into less weighting. To conclude that, our 12-month price of $93.76, which is a 34% upside, recommending this company as a buy.
These risks affect Sempra's valuation. Regulatory delays in LNG expansions could cost the company an additional 10 to 15% in project costs. Market competition from NextEra is pushing Sempra to expand faster in renewables. The cybersecurity threats are rising, but Sempra has invested $1.5 billion in digital infrastructure. Sempra has mitigated these risks through its diversified portfolio and proactive risk management, which includes wildfire mitigation.
So ESG is key to understanding the goals and directions of Sempra. So to begin with environmental, their number 1 goal is to be net zero scope 1 and 2 emissions by 2050. That ties into their renewable goal, where today 35% of their production is renewables, and they hope to get to 50% by 2030. And in light of recent events, they've pledged $1.5 billion into a wildfire mitigation program, which has an added benefit of reducing accidental weather-related shutoffs by 25%. Governance, it ties into governance as 72% of their executive pay is predicated on these ESG goals, production goals, safety goals, clean energy targets. And this ties into the fact that 83% of their board is independent and have an attendance rate of 99%. Essentially, Sempra shows that they're taking all necessary steps to prevent an environmental disaster or a regulatory nightmare.
For social change, Sempra prioritizes diversity, with majority of its employees, 42%, are women and minorities. They also lead in initiatives which are equitable energy programs with low-income bills and also EV station assistance. They also another initiative program that they do is CARE program with an energy-saving retrofits. With these initiatives also enhances Sempra's public images and also their community ties.
We put Sempra's ESG objectives into our own scorecard, and we give Sempra a 4.5 out of 5. Sempra's focus on ESG will help the company protect it from future disasters, enhance public perception, and ensure diverse leadership.
To conclude, with all of our 5 investment theses, and also their focus on investment risk mitigations, and also the undervalued price throughout valuation, and the management focus on ESG, we believe Sempra as a buy. And now open to question and answer. Thank you.
Okay, thanks. Let's start with, you had your ESG and you had the wildfire risks, okay, and you sort of scored that. But how do you think about the binary nature of, the wildfire? Because, it can be catastrophic to some of these companies. And so when you think about, making a recommendation on a buy, how did you incorporate that wildfire risk and into the overall analysis?
Yeah, you want to go back to that one? The ESG scorecard. Yes, so it's a multitude, and it's true that wildfires, you can prepare all you want, but there's a level of uncertainty, right? But our confidence comes in, number one, they've pledged another $1.5 billion to wildfire mitigation, but more expanded, they've pledged $56 billion to modernize their infrastructure, right? I know from past wildfire experiences, I'm from California, some of them are caused by aged infrastructure, specifically PG&E. They had old infrastructure that, sparked the leaf on fire, right? So them investing $56 billion gives us confidence that those sort of issues are less probable with Sempra.
You had a number of valuation models, but can you help me understand and defend your rationale for the weights of 60, 30, and 10 to those two?
Yes, absolutely. So our first step was looking at the historical data of the Sempras. As you can see on here, we look at the historical, and then that's how we put it our base, but then we also added into market outlook of what's going to happen in the future. In terms of our valuation model, we look across at different type of valuation, and we realized that Sempra has a huge focus on their earnings per share. And that's why we highly focus on the 60% of weighting on the valuation and then 30% on their PB multiple because they have a high assets. We look into their free cash flow because we use our DCF model, and we realize it's very volatile and has a negative free cash flow year over year. So we decided to put a lesser weighting on it. And it makes us more confident on the predictability side of the earnings per share since the management announced it year over year. And they also met the targets.
In addition to that, Sempra is not just a pure utility company play. Sempra has an LNG, Sempra Infrastructure segment. So even though Sempra has the regulated California and Texas subsidiaries, we having a different segment with Sempra Infrastructure with LNG, it is better to have multiple analysis.
So a follow-up quick on that. When you're using earnings per share, are you using GAAP numbers or are you using adjusted numbers? Because management reports both, and there can be a large difference between the two at any point in time.
So we use the adjusted numbers,
Okay.
just to make sure because that's how the management also use it in our model. We mainly using the adjusted earnings per share because we see that high difference.
Okay. So sorry, that was just a clarification on the prior question. But CapEx, the company announced 48, then they went to 56. California needs huge infrastructure upgrades. Texas needs huge infrastructure upgrades. They want to do the LNG investment. Did you look at, from a sensitivity, from a valuation point of view, to debt issuance, equity issuance, and do you think the $56 billion is enough, or do you think they're going to have to do more?
So we see that it is a huge increase from 48 billion to 56 billion, but then we look at management strategy and realize, oh, that kind of makes sense. But we also take a look at what has happened in the past. We look at their liquidity analysis through our ROE DuPont, and we see that they have a pretty consistent quick and current ratio, which we also believe that that's also going to happen in the future. We make sure in our model that they have a steady cash as well, because therefore they need to add more debt, right? So that's why we want to make sure that it's within the line of our forecasting.
Yeah, and to follow up, they have a debt to equity ratio of 0.86, which highlights their responsible spending. And with a dividend payout of almost 3.6%, they only have a payout ratio of 60%. So they've really shown themselves to be responsible spenders. And so we're confident that the $56 billion isn't going to press on their liquidity and things like that, and even despite the interest rate environment into the future.
So just on LNG, it's a big opportunity for them, but trades in the spot market can get whipped around a lot. So how do you guys get comfortable that they'll actually be able to deliver on those long-term projections with LNG?
Yeah, that's a great question. So that actually only comprises 20 to 30% of total LNG contracts around the world. Most LNG contracts that Sempra does are actually long-term. For example, they have contracts with RWE in Germany, their electricity company there. Those are like 20-year contracts. Most of their contracts are 20 to 25-year contracts. For example, with NGIE Corporation in France. So those are, they have a stable revenue with that, and the spot market does only 30% of their LNG sales.
Yeah.
Yeah, in addition to that, also the LNG, they not only like have the contract, but they also like look into their main market is also Asia, where China and South Korea, and also with right now in Europe as well, because of the war between the Ukraine. So they look into America, like to Sempra, so they can be able to get more, because their main focus is right now is they move on to clean energy, where there is like opportunity for Sempra to invest more on that and earn a lot of, generate more income from that, because they are like no longer concentrating on oil and oil, instead they move into the clean energy. So there is opportunity to grow for their profit to grow.
Yeah, really quick, I just want to throw, can you go 30? I love the question, I think it's the next slide actually. Yeah, so a lot of it, but the third paragraph, it says that they have a non-binding agreement with Mitsubishi Corporation to produce natural gas, right? And it highlights that they're prepared for volatility in the LNG market. They're looking to make contracts with these export markets. And so we're confident that when Sempra has these projections for LNG in the future, that they're putting it on paper and making sure that that revenue does come.
You have a number of risks highlighted. I recall reading interest rate. Do you account for that? Do you do sensitivity analysis on the various risk factors? Help me understand those variables.
Yeah, with regards to interest rates, well, the company does have significant debt financing with the $56 billion investment. It is projected that the Fed's funds rate will remain stable. There is some inflation risk from the last core CPI report. It went over around 3%. But the most likely case scenario right now is that it will remain the same, and there is no interest rate risk at the moment.
In addition to that, for Sempra, they also have their loans is flat price rate. So meaning their interest, they have like a long-term financing interest rate. So most likely they'll not be able to be vulnerable if they're like a market interest rate fluctuation.
Okay. If you think about what they're doing, at least from what you're saying, is they're taking money they generate in regulated areas and they're investing in their higher growth areas. Is there, in your view, is there a risk that the Public Utilities Commission in California is going to say, no, you can't do that because our rates have been going up at 8% a year, which is absurd. As a ratepayer in SDG&E, I can tell you it's absurd. Is there a risk, and did you look at what the impact might be of that?
Yeah. So the first thing is we want to highlight that we adjusted our numbers because 2 days ago in the recent earnings call, they mentioned that California changed these regulatory risks. And so we actually adjusted our target price down accordingly. It was $99.70, and now it's $93. So we accounted for that. But I think what's key is that Sempra is so diversified geographically, right? They're in Texas, they're in the Permian Basin, they're in Mexico. So any loss in California, projected loss, we feel along with that adjustment, we're safe.
Yeah, and also in addition to that, we see like they were pretty diversified. Like if you see here, like 57% from utilities, also 26% from infrastructure, and 17% from renewables. So pretty much for Sempra, they don't just focus on just one. So which makes them not vulnerable to any risk, which makes them more prepared. So with this, diversify their services, their segments that they're providing, making them positioned for successful and for long-term growth. Thank you all for your
Thank you.
presentation.